and welcome. You are watching News 9 Live. This is Business Plus. I am Krishna Kumar and joining me in the studios is Suyash Maheshwari as always. Suyash, let's begin as always with today's market action. Markets finding a volatile session of trading in a close, narrow range and eventually snapping a 7-day winning streak.
Yes, Krishna, the market turned highly volatile after opening in the green. Now, Nifty at open scaled a new lifetime high of about 21,110. Also, Sensex opened 300 points higher, just 200 points shy of its record high levels. But after that, we saw selling pressure, and as a result, Nifty specifically was trading in the red for the majority of the session and ended with marginal losses and snapped its 7-day winning run. Now, the big losers of, as you can see, today's segment were the mid cap and the small cap indices, which succumbed to profit booking. The small cap index ended about 4% lower, whereas a mid cap index ended 3% lower. Another thing that we need to point out is that volatility index, which is a fear index, India VIX, climbed about 3%, but it's currently still sits below the 12 mark, which indicates that the volatility is lower. But compared to the previous session, we have seen a 3% spike in volatility.
All right, before we get into the finer details of the day's trading session, Suyash, clearly no big trigger or cues really moving the markets. But one thing today for sure that did move the markets, if you can quickly tell us, one big headline emerging out of the day's trading session was the beating that auto stocks took in the day's trading session.
Definitely. So, auto stocks were actually, in fact, Nifty Auto was among the top loser in today's segment, and several of the auto stocks, especially the diesel engine makers, suffered heavy losses in today's segment. Now, as the reason was, of course, Mr. Nitin Gadkari said that there could be a 10% additional GST on diesel cars. Now, he later clarified and said that nothing is in the works right now, and as a result, some of these stocks which were trading about 4% lower recovered from their day's low. Now at close today, Mahindra & Mahindra was down about 1.86%, in line with how Nifty Auto performed, which was also down about 1.86%. Maruti Suzuki, which fell about 3%, recovered and ended almost on a flattish note, down about 0.3%. Ashok Leyland and Tata Motors also saw some selling pressure today, and both stocks were down about 2% in today's trade.
Right, auto stocks nose diving in the day's trading session on that first confusing report that came out on how the government could be possibly considering a 10% additional GST on diesel cars, diesel vehicles, this was around noon time. When the government, when the report started emerging that the government is considering this 10% additional tax on diesel vehicles, diesel cars, and then just about an hour or so later in the afternoon, there was clarification that came officially from the minister in question, Mr. Nitin Gadkari himself, there you go on your screens. There is an urgent need to clarify media reports suggesting an additional 10% GST on the sale of diesel vehicles. It's essential to clarify that there is no such proposal from the government. Let's quickly listen in to what Minister Gadkari had to say.
पोल्यूशन ये बहुत गंभीर समस्या है और पोल्यूशन के कारण हमारे स्वास्थ्य के ऊपर भी बहुत विपरीत परिणाम हो रहा है। तो मैंने आज यहाँ आया हूं इसलिए नहीं, पर मैं पिछले 8-10 दिन से एक पत्र तैयार करके रखा हूं। आज शाम को 5:30 बजे वित्त मंत्री मेरे घर पर एक मीटिंग के लिए आने वाली है और मैं उनको रिक्वेस्ट करने वाला हूं कि आने वाले समय में डीजल से जो भी इंजन चलाते हैं उसके ऊपर एडिशनल 10% जीएसटी लगाओ, ताकि जल्दी इसका ट्रांसफॉर्मेशन होगा, नहीं तो लोग जल्दी सुनने के मूड में नहीं है।
There you go. That is Union Minister Nitin Gadkari speaking at the SIAM Auto Industry Convention. That's SIAM. Those statements, leading people to believe that the government is considering a 10% additional tax on diesel vehicles, whereas that wasn't the case. And then finally came the tweet from Union Minister Nitin Gadkari saying that there is no such something in active consideration as far as the government is concerned, and also the fact that this entire statement was made in connection to the fact that there should be greater adoption of sustainable transportation going forward. Fuels like diesel as well as rapid growth in automobile sales is imperative to actively enhance embrace cleaner and greener fuels. Mr. Nitin Gadkari, Union Minister Nitin Gadkari, making that point clear that there is no additional 10% tax or GST on the cards for diesel cars. That just happens to be what one of his ideas as far as that piece of news is concerned, not a reality as far as the levying of that tax is concerned. Moving on. We have Suyash, who is yet to give us the rest of the day's trading sessions details. So Suyash, talk to us, what else moved the markets, what are the big gainers and losers?
So when we are talking about the sectors, as we said, auto index was among the top losers in today's trade. Apart from auto, pharma and IT were actually the outperformers. They ended with decent gains. This is actually the top gainers of today's session in the Nifty pack. We are talking about the sectors, which sectors also include IT and pharma were the outperformers. They ended the day in the green with margin, like Nifty IT was up about 1%, whereas pharma ended marginally higher. Among losers, Krishna, was a metal index.
If you can get the top sectors chart up, there we go. Top sectors, if you can get the top sectors chart up.
Yeah, so among losers, Krishna, was the media pack. The index Nifty media fell about 4%, followed by a 2.38% decline in the PSU stocks. Apart from that, metal index also saw some profit booking at higher levels. The metal index, which has been rallying for the past couple of weeks or so, was down about 2.67% in today's trade. Now, looking at the top losers and the gainers today, let's first go to the losers. BPCL was the biggest loser among blue chip stocks. It was down about 3.8% in today's trade. NTPC was down 3.6%. Power Grid Corporation, Adani Enterprises, Coal India also fell about 3% each. Now, among the gainers today in the Nifty pack was TCS. We saw some buying action in TCS and Infosys as indicated by the outperformance of IT stocks. TCS was a top gainer in today's session and it was up about 2.5% in today's trade. L&T, which raised the buyback price from 3,000 to 3,200 and has been on a run up. The stock has rallied about 30% in 3 months time or so. Continued to gain today. It closed just shy of the 3,000 mark and was up about 1.88% in today's trade. Infosys was another IT bellwether stock that posted solid gains today. It was up about 1.66%. Ultratech Cement and Dr. Reddy's also gained about 1.4% in today's trade, Krishna.
Right, that's Suyash there with the day's trading session. We also have Mr. Avinash Gorakshakar, Director of Research, Profitmart Securities, joining us live on this broadcast. Avinash, thank you so much for taking time out. Tell us, not much moving the markets, barring that piece of news, or rather misinformed news that moved the auto stocks for the day.
Yeah, I think, Krishna, this news which came in the market in the afternoon, I think rattled most of the diesel segment stocks within the auto pack. But I think there was a clarification later on by the minister saying that, nothing of this sort is in the works. I think a clear misstatement, from his side. And I think the markets were immediately concerned that if at all a 10% GST, an additional GST comes in as a pollution tax, that would have definitely impacted margins of players like Tata Motors, Ashok Leyland, Mahindra. But I think all things done, I think this is not a possibility. And I think we'll have to wait for the budget to spell out something more specific here. But I think the markets were clearly disappointed. By the time the markets recovered, a large part of the damage had already been done. So I think probably you'll see a good bounce back, in tomorrow's session, because earnings are unlikely to get impacted. And specifically for segments like passenger cars and commercial vehicles, the diesel component is a very important component. So I think all said and done, I think the markets will now look at the road forward. I think this news has been fully discounted. And I don't think you're going to see any further damage for these stocks in tomorrow's trading session.
Now, Avinash, one of the stories was that we finally saw some profit booking in the mid cap and the small cap space. Mid cap index was down about 4%, small cap index down about 3%. So is it finally time to see some see some correction in the broader markets?
Yeah, I think clearly, mid caps were trading at all-time highs, and I think a correction was expected sooner than later. And I think, see, you must understand one thing, that within the small cap, mid cap basket, we had seen that substandard quality stocks had also risen quite significantly. So I think, obviously companies which were well managed, and obviously companies which have got very strong earnings growth trajectories expected going forward, are unlikely to be badly impacted. But whenever a correction of this sort comes in, then I think obviously, the entire markets get shaken up, and that is exactly what has happened. Maybe we could see this trend for the next 2 to 3 days before stability comes in. But my sense is that this also offers an opportunity for investors who would actually miss the bus in buying good quality mid-cap stocks. So I think it's not the end of the road, but yes, I think some caution will have to be taken. Markets would now realign and start looking at even large cap companies like Larsen and Toubro, HDFC Bank, ICICI Bank, which have not moved at all and where fundamentals continue to be strong. So some sort of, stock reshuffling will do happen. But yes, mid-cap story is not over. I think it's only a big profit booking move, and it's not a kind of a panic sell-off.
Right. Even as we're discussing this, we are awaiting inflation data. Avinash, talk to us. So far, estimates say it's going to stay above that 7% mark. Assuming that it's going to be above 7%, are you assuming it's going to be above the 7% mark? And more importantly, is the markets assuming it, and has it already factored in the price?
See, I think inflation will continue to stay elevated. Now, whether it comes above 7% or closer to 7%, I think what is important is that, most of the sectors like FMCG or typically, consumer durables, these are the sectors which are going to be impacted badly because inflation hurts these sectors the most. I believe, sectors like real estate, or for that reason, housing, typically, I think despite repeated increase in interest rates in the economy, the inventory sales have been pretty solid. So I believe that clearly, I think if at all inflation comes at a higher level, and possibly, in the coming RBI policy, there is no further kind of rate cut, possibly we could see another 25 basis point hike, then I think the markets would take it negatively. I think as of now, I think the markets have not digested this. If at all the inflation numbers is above 7%, then I think near term, I think trajectory for the markets could again be a little, volatile, and we could see a little bit of selling, because this is definitely not good news. That clearly shows that, the economy is overheated, and I think probably you would have to, cool it down in the near term.
Now, Avinash, one of the biggest underperformers in today's session was the PSU banks. Now, Nifty bank and banking stocks had just joined the rally, and we were expecting some sort of it to drive indices to much higher levels. But now today we saw some correction. I think the PSU index was down about 2.38% in today's session. So, what's a big overhang for the PSU stocks, PSU banking stocks specifically?
No, I think, see, PSU banking stocks have been underperforming because largely there have been some fears in the market that credit growth now could come down to single digits. And if inflation moves up, then I think, very sensitive product segments like housing finance and specifically, real estate demand is definitely bound to be impacted. I think till now, nothing of that sort has happened. But if inflation continues to go up further and interest rates continue to go up, then banks would obviously find their yields to go down. And I think you could see some pressure on their profitability. As far as the PSU banks are concerned, the other fear in the market is that the government has constantly used higher prices to offer, offer for sale kind of opportunities. And that also has been a drag factor for some of the small size, medium sized banks. So I think you're going to see a lot of sluggishness at least for another one or quarter. And hopefully the second half of FY24 should be significantly better. If the monsoon is good, inflation cools off, and we see, rural demand picking up, then I think banks should do well. And that's why I would believe that post-September, that is the second half of FY24 should be better. But yes, the second quarter numbers could be a little depressing and a little, negative, from the market standpoint.
Now, the rally that we were seeing in the banking stocks, was it on the back of RBI removing the incremental cash reserve ratio, which had, squeezed out that excess liquidity? So the liquidity is going to be back in the markets. So how will that bode for banks?
So I think, see, liquidity has been pretty comfortable, and despite the RBI's efforts, credit growth was in double digits. So I think these kind of measures, the RBI was just trying to control liquidity in the system. My sense is that possibly, after September, we could get a clearer sense as to what is the kind of credit demand, what is the liquidity in the system. But as of now, I don't think that is going to have any significant impact on the near-term kind of bank stocks outperformance. I think everyone is aware that PSU banks have been sluggish for the last 1 to 2 quarters compared to the private sector banks, and I think this is the fact that probably people are thinking markets are factoring that credit growth, which was 12-14%, would now come down to realistic levels of 6 to 8%. If at all that happens, then I think the expansion of balance sheets would be a little difficult as compared to last year. So I think credit growth in the system is going to be critical, and plus of course how inflation cools off, how the monsoon performs. These are all macro factors which would impact the banks going ahead.
Now, Avinash, in the last 7 days, Nifty was able to, climb about 750 points, and everyone seems to be participating in the rally. Retail investment is at all-time high. Domestic institutional investors have continuously poured in money, but foreign institutional investors continue to remain absent. Now, what do you think will bring them back to the table?
Yeah, I think FIs are very closely looking at the movement of the rupee. If the rupee continues to depreciate, then I think FI flows would be little moderated. And more importantly, I would believe that, as of now, I think most of the FIs are sitting on cash, considering the fact that they were quite long expecting a correction in the broader market. As far as the mid caps, small caps are concerned, there were a lot of FIs and a lot of funds who had invested in these companies ever since the rally in April started. So I think, it's going to be a selective kind of strategy from them. I would believe that FIs would still continue to look at the Indian markets, considering the kind of alpha generation they have made in the smaller and mid-cap companies, and large-cap companies currently trade at fair to attractive valuations, specifically if you look at the private sector banks like ICICI, SDFC Bank, IndusInd Bank, and obviously large infrastructure players like L&T. I would believe that, on the ground, earnings trajectory is going to be solid, but I think it requires a little more time before we see a large part of that FI liquidity coming in. So post September, I think things should normalize. As of now, I think they would obviously be on the fence and look at better opportunities at lower levels.
Look for better opportunities at lower levels. The word coming in from Mr. Avinash Gorakshakar as we discussed that trajectory of Nifty. Avinash, thank you so much for breaking down the day's trading session for us. As always, a pleasure having you. Hope to keep having you here again and again. But for now, we'll let go. Thank you so much for being with us. And Suyash, that's a great note to continue our show on. That trajectory of Nifty, a storied index. When it came onto the scene first, it was that new age tech-savvy index, and it continues to be that, doesn't it?
Definitely, Krishna. The story of Nifty from 1995 in November, when it was launched at a base value of 1,000 to it jumping to 20,000 in a span of 27 years or so, is quite interesting. Now, Nifty 50, for those who are not very familiar, is a index of 50 blue chip companies in India which are highly liquid. Now, it is often considered a proxy for the Indian stock market's performance. The index was launched in 1995 of November at a base value of about 1,000 rupees. It took about 27 years. I have the exact numbers, Krishna.
Right.
27 years, yes. 10 months and 8 days for the index to climb from 1,000 to 20,000. Now the index has more than for the first, from 1,000 to 10,000, it took about 10 years for the index to reach from 1,000 to 10,000 levels, and the next 10 to 20,000 journey we completed in just about 6 years. Now, if we look at back in 1995 November, the market capitalization of all Nifty 50 companies stood at just about, as you can see on the screen, 1.44 lakh crore rupees, and it has surged 98x in the last 27 years to about 141 lakh crore, marking a 18% compounded annual growth. So one of the a storied, definitely a story that we have been tracking. And also, if we look at the Nifty, now NSE rejigs the index twice a year, and as a result, the composition of index has changed significantly over the years. So back in 1995, financials was contributed to about 20% of the entire Nifty pack. Currently, it has a weightage of about 38%. Right. FMCG, which was about 19%. Back in 1995 November, currently constitutes about 9.8% of the Nifty pack. Metal and mining index dropped about 70% in its weightage in the Nifty pack, from 10.9% to 3.5%. IT stocks which were largely absent from the index are now responsible for about 12.7% run up in the Nifty index. So a lot of interest we are seeing across the board, and we have seen a rejig in the Nifty pack as a result, and many of these stocks have also contributed in the recent surge.
Right, fascinating numbers over there. 27 years, 10 months and 8 days for Nifty to climb Mount to 20k. Fascinating number crunching there, Suyash. Nifty reaching the 10,000 mark on the 26th of July 2017 after more than 21 years. Just in 2017, and then it took almost another 6 years, 1 month and 16 days to reach the 20,000 mark on the Nifty. A fascinating achievement. And to talk more, we have my colleague Karthik Malhotra joining us here in the studio. Thank you, Karthik, for taking time out to be with us. And of course, we also have Karthik and Suyash, a very special guest joining us now live on the broadcast, and that is Mr. Vijay Kedia, founder and managing director at Kedia Capital Services Private Limited. Mr. Vijay Kedia, pleasure and a joy having you here on the show, to just especially because of the occasion. You are here for Nifty scaling the 20,000 peak, celebratory mood as far as India's stock markets are concerned. And what a journey it's been for a new index. I mean, we talk about, Sensex, we talk about the greatness of the Indian stock markets. We always talk about the ancientness of Sensex. Whereas Nifty is concerned, you talk about how new and how tech savvy it is. It's the opposite, isn't it?
Yeah, of course. First of all, let me clarify that I am managing director of not Kedia Capital Services, but Kedia Securities Private Limited.
All right.
So that is all right.
Fair enough.
And secondly, of course, I think the 20,000 is just a number, it's just a journey, and miles to go. And like Mr. Maheshwari has said that, informed that first 10,000 came in 10 years, and second 10,000 came in 6 years. I believe the next 10,000 should come in lesser than 6 years, so maybe anywhere between 5 and 6 years.
Actually, Mr. Maheshwari is wondering if you have written a song on the occasion or not. That's what we were wondering, Mr. Kedia.
Mr. Kedia, we've been tracking your social media, your YouTube channel all of yesterday when Nifty first hit 20,000, hoping for a Kedia version, a Vijay Kedia version of Nifty at 20k emerging. But that hasn't happened. Do you have something for us, for our viewers?
No, I had written a song in anticipation of 20,000 a week back or so that you must have heard on YouTube and on my Twitter. So that I had written a week back. In anticipation of 20,000.
Let's hear it again.
Let's hear it again, sir. Then it's about time you hear it again.
Yeah. Hello.
Yes, please. We would love a live rendition of that song again. It's a good occasion.
No. Yeah, I will recite 2 lines. Like it was like it was something like this: "सोच कर, समझ कर, invest कर, और rumor पे टिपते न time waste कर, knowledge और patience का business है ये, अनुभव से सीख और best कर." So this is what
lovely. Just what we wanted, and we've got it live right here from Vijay Kedia. But Vijay, I think in the same breath, it's important to discuss this entire global sentiment, which seems to be so bullish on India right now. Any report you read, bullish on India, bearish on China, overweight on India, underweight on China. Talk to us about this global sentiment that you're seeing, which is so bullish on India, especially also in the light of what we've seen at G20 right now.
Yeah, so of course, everybody is now talking about India. India is what you can call the hot topic everywhere, not only economists, but diplomats and politicians and fund managers, and everybody are gung-ho and bullish on India. But remember one thing, that India story, which that is different than what is happening in the stock market, because stock market might have anticipated this thing for last 1 year. That is why, if you will see that entire world market was not, India was outperforming the entire world market, maybe because of this anticipation. So what I would like to say that that story is going to play out in next decade. Okay, it is not going to play out in just 1 month or 2 months or 1 year. It's every year it will be progressing. But stock market, people get carried away. So at this juncture, I would say that people have to be very cautious, and they shouldn't get excited, and because after all, it's a game of, it's a business. If you will treat it as a gambling, then there is a code of mind that market will reward you as per your perception. If you will treat the market as a gambling, then it will prove a gamble for you. So if you will treat it as a business, as I had said, I mentioned in my this poem, in my song also, कि knowledge or patience का business है ये. If you treat it as a business, then it's a ongoing thing. It will happen, day by day, month by month, or year on year basis.
Mr. Kedia, I have to ask you, we've seen the journey to 20,000. Now the journey for the next 20,000, Nifty at 40,000. Which are the sectors which are going to take Nifty to 40,000 and which are the specific stocks which are going to take Nifty to 40,000 next?
Stocks, I don't know which stocks are going to take it to 40,000. And plus, it's a long way. And regarding sector also, I would say that whatever sector, this sector churn keeps on happening every 5 years or maybe every 10 years. So currently at this juncture, as on today, the sectors which I like are, of course, capital goods and infrastructure. I think there is a infrastructure new sunrise industry, and this should also do well. And of course, 38% market share, as Mr. Maheshwari just now showed that video. 38% share is from the financial services, financial companies, and all. So of course, without finance, you cannot think about all this infrastructure story playing out. And I think new theme is like electric mobility. Besides this, there would be many sectors which are going to participate in a journey from 20,000 to 30,000. Just one or two or three sectors cannot take the index to 20 to 30. So I think all the sectors should join and participate. Maybe some will participate in a bigger way, some way in a medium way or something like this. But it will keep on happening.
Mr. Kedia, we often talk about these milestones, 10K, 20K, 30K, then 40K. Now, from a short-term perspective, the short-term destination for Nifty, can we expect Nifty at 25,000 by the end of the year?
Wow, that's...
No, I don't think so. By the end of the year in 3 months. No, impossible. As on today, in my limited knowledge, it seems impossible.
End of the financial year, sir?
Yeah,
I was about to say that. End of the financial year?
3 months, end of the financial year?
No, I don't know. It is difficult to say. Let me tell you, it will just be a guesswork. Financial may 20% next. I don't know. Next year is the election year. It depends what is the outcome of the election. I think this market, before this election and before budget, maybe this rally will fizzle out. This is what I believe. I don't have any data to say that. It's just a fluke. Maybe this rally or this euphoria, or you can call this excitement, should last till Diwali, and after that it should then budget will be around the corner, election will be around the corner. The market would be cautious next year in the first half next year.
Markets will be cautious in the first half of next year. Okay, next year we're still pushing the boundary too much. We still have a year to complete before we get to next year. Tell us about where do you see Nifty by the end of calendar year 2023, and more importantly, what kind of strategies do people looking at the Nifty, be it those investing in index funds or investing in index stocks? How should they approach the Nifty for the rest of the year?
I think by this end of the year, by December 2023, Nifty should be somewhere around 5 to 7% up, I think. I don't know, end of the year, it will touch and it will come back or no, I don't know about it. But maybe say 5%, 5%, 7% from here, that should be the target for the Nifty. And what was your second question?
I'm just asking, if for those, entering the markets be it in the form of index stocks or index funds, how should they treat the Nifty as an item on their portfolio? What should be the outlook?
I would advise that the investors which have not entered this market so far, I think it is very dangerous for them to get into the market at this juncture after 20,000. If they're coming into the market and investing directly in the market, so they are into trouble. I think if anybody wants to take position, they should come with mutual fund. If you have not invested so far in the market, that says that you are a new investor and you are a new investor. So now just looking at the excitement in the market, now you are coming to invest at this juncture. So it is better that you invest through mutual fund and don't get excited when there is excitement in the air.
All right. A lot of analysts globally also, try to look, Mr. Kedia, for this Goldilocks situation where the markets are neither too hot nor too cold to enter. Do you think at this stage the Indian markets are a little overheated? We've seen the kind of correction that we saw in the mid cap and small caps today. But overall, do you feel at 20,000 levels, even the large caps are a little overheated at the moment?
Of course, they are not large cap, may not be overheated, but there are mid caps and small caps are overheated, no doubt about it. You see the stocks have gone up 50%, 60% in 1 month or 2 months or 3 months. So that is a cause of worry. And of course, this will not last forever. So ultimately, they will have to react. But when we are talking about mid cap and small cap, that means we are talking about 5,000 shares. So that's a long list. So it's not that all the entire mid cap and 5,000 shares must have become overbought or euphoric. I'm not saying that, but I would advise people that out of 5,000 shares, or maybe 90% of the shares are like Bhangar cap. So better don't trade in those shares. They come to the party when they come to show up when there is a party in the market, and they vanish when the party is over. So one has to be very careful investing at this juncture.
And on the macro global environment, Mr. Kedia, before we let you go, how likely is it, you mentioned party, for the India party to actually get hampered by what is happening in the world around us? I mean, we'll look at US inflation data coming out tomorrow. We will look at the outcome of the FOMC meeting next week. Any sort of further tightening in the US, any shockers on inflation unaccounted for perhaps in the US that could spoil the party back home as well?
I don't think so, because that is all has been digested by this market. Now recession figure or inflation figure or interest and all that already been taken in the account. I am not saying that those things are not going to affect the market in my limited knowledge. I don't think this party is over. What I'm saying that maybe in some of the sectors, in some of the pocket, market has become euphoric. I'm not saying that entire market has become euphoric. 20,000 is not a big deal. But you will find many mid-cap and small-cap shares which has gone up by 5 times and 10 times. So you are saying that in 6 years, index has gone up from 10,000 to 20,000, but just doubled in 6 years. But there are many stocks which has gone up 4 times and 5 times in last 6 months. So I am just cautioning to trade or to invest in those shares. And any new investors, small investors, do not have that kind of intelligence to figure it out that where the froth is and where the real value lies. So for them, I am saying that you should be cautious and you should invest through through mutual fund. And if you have not invested in this market, then do not invest directly. This is what a message to them.
Kyunki mutual fund sahi hai is the word coming in from Mr. Vijay Kedia on the momentous occasion of Nifty scaling the 20,000 peak. Mr. Vijay Kedia, pleasure and a joy having you, and hope to keep having you here on Business First. But for now, thank you so much for sharing so much of your stock market wisdom on this show this afternoon. Thank you so much. We let you go at that. But we continue understanding data. We continue understanding what is going to affect us as far as an economy is concerned. And one of those definitely is inflation. Inflation data, CPI inflation or consumer price inflation data is set to be out in just about less than an hour's time from now. And the concerns are, Karthik, that this time too, it's going to remain above that 7% mark, whereas the RBI's target range doesn't allow it to be above the 6% mark.
Absolutely. And Krishna, CPI, we are actually talking about the headline inflation right now. We are talking about inflation that also accounts for the volatility of food and fuel prices. And that print coming above 7% is going to be bad news. And that is what most economists, most analysts are predicting right now. Yeah. In fact, some of the polls suggesting that it could go into a decimal point above at about 7.1% odds, right? So that is definitely going to be bad news. The RBI has a threshold of 6%. In fact, wants to hammer inflation down to 4% with a handle on both sides of about 2% or so. So any figure coming in excess of 7%, and we'll know in about an hour or so from now, like you said, is going to again keep all antennas going up that, hey, what is going to happen at the next MPC? And any further tightening could literally snap. We've seen there hasn't been much credit offtake. We are in a high interest rate environment right now on the back of high inflation. Food inflation, unfortunately, nothing much that the government can do about. I think the number that we should really focus on this time around needs to be the core inflation.
Right.
And if the core inflation stays in line, and we have seen that sort of, trend line going down, if that continues to happen even by a 0.2% or so, it seems that the RBI's tightening would have worked. Right. And then even a big headline inflation number on account of, let's say, a double-digit food inflation should not be seen, as a great dampener. And we should hope that the seasonality should take care of that double-digit food inflation.
Double-digit food inflation concerns. We have Mr. Vivek Kumar, economist from QuantEco, now joining us live on the broadcast. Vivek, lovely having you on the show. Thank you so much for taking time out. Right now, we're looking forward or looking ahead to, not really looking forward to, but looking ahead to inflation, staying above the 7% range. Tell us, are you also in agreement with all the polls so far that we will be above the 7% range? And if so, how much in trouble are we?
Hi, thank you for having me on the show. So yes, inflation did kind of shock everybody last month when it sprang. A very nasty surprise came in at 7.44. For the August month, which is going to be released in, I think, just about an hour's time from now, the market expectation is that it's going to moderate a little bit from 7.44 to somewhere close to 7%. QuantEco's expectation is that it could be a tad lower than that in the 6.8, 6.9% range. So I guess by and large, the feel in the market is that things will start to cool off compared to where it was in July. It's a matter of perception, how much cooling off are different market participants expecting. But nevertheless, the broader message is that the inflation number on a monthly basis is likely to have peaked in July on account of the food price shock. And things here on will start looking southwards as far as the inflation prints are concerned.
Right, but southwards, how much southwards, how soon are we going to get back into the RBI's comfort range of less than 6%? How long before we get there?
So I guess that's probably a month away from now, because if let's say you end up close to 7% in August, for September, that is where the entire seasonal impact of the tomato price correction and other vegetables and fruit price correction will start to manifest. So not that it's not gonna manifest in August, it will manifest in August. But August will be just the tip of the iceberg as far as the seasonality, the favorable seasonality is concerned. Bulk of that is going to play out in September and October. So that is number one. The number two, or which is more important, is the LPG price reduction. There was a sizable decline, or in fact, reduction in prices. This was of the order of rupees 200 per cylinder, which was announced towards the end of August. Now, since the data actually averages out everything for that particular month, you will not see that impact perceptibly in the month of August. The entire LPG reduction will play out in the month of September. And that's a sizable number that, according to us, will give you, roughly a 30 basis points relief. So net, you should, if everything plays according to the plan, both the LPG price reduction as well as the food price decline, which has been going on, if it continues to persist, then you should see a number which is lower than 6% for the month of September.
And specifically on the food inflation, hi Vivek, Karthik here, nice to have you back. Specifically on food inflation, what is your analysis? What is the analysis of the QuantEco team? Are we likely to look at a double-digit food inflation print coming in, or do you suspect it would be in single digits now?
So thanks, Karthik, for having me on the show. Double-digit food inflation, we already saw that for the month of July, when food inflation as a whole was closer to 10.5%. Now, as I said, inflation has probably peaked, and that peak is the essence of that peak is getting derived from food inflation. The food inflation, in some sense, has peaked in the month of July in year-on-year terms. And going forward, as the favorable seasonality picks up, as supply starts responding to the higher prices, because some of these items, for example, tomatoes, etc., they have a very higher number of cropping cycle. So they are sown, and the output is taken almost 4 or 5 times in a year. So when there is a high price signal, also there is supply which chases that price. when supply chases high price, it is bound to fall into that loop of supply chasing higher price, and then prices start to correct. So this will play out, and hopefully in the month of August, food inflation should be somewhere close to 9.5%, and sequentially, if you move forward, it should be somewhere close to 7.5% by the month of September. So it has hopefully peaked already in the month of July.
So given the seasonality at play here and the unseasonal rainfalls that we saw, which also shot up food prices, Vivek, does it make sense actually to look at headline inflation data at all? Or should we actually focus only our energies on core inflation, because that is going to be an indicator to tell us whether RBI's tightening is working, moving in the right direction or not? Because when it comes to supply side issues, I think there's precious little that the RBI can really do.
So that's the purist's argument, and typically, everybody knows that central bank has little control over fuel and food prices, because they do not show any sensitivity to interest rates, because the central bank typically controls either interest rates or liquidity. So in some sense, central bank really hopes that through liquidity and through interest rates, it sends out a signal to control core inflation, and core inflation then adjusts. If, let's say, your non-core inflation, either coming from food or fuel, is too high, then core inflation adjusts correspondingly lower, so that the headline is at a relatively acceptable level. I think that's probably the reason why policymakers had the foresight, in case of India, to give a very wide range of inflation target for India. So although inflation target for us is at 4%, we have a 2% band. That's something which is not normal. You wouldn't see a 2% band in case of even emerging market central banks as far as inflation targeting is concerned. Typically, even if countries which do have a band, they'll probably have a band of 1 percentage points around the target. India has a 2 percentage point. And this 2 percentage point essentially is to absorb shocks like these. So ideally, yes, that's something which is on RBI's side. Core inflation has been decelerating for quite some time. And if you look at the recent numbers, it is now close to 5%, which also incidentally happens to be the long-term average for core inflation. So if you have to say whether the RBI monetary policy tightening is doing its job, then probably it's doing its job well, and it has managed to align core inflation to its long-term trend. It is also possible that if RBI stays pat at the current level of repo rate, or in fact, persists with repo rate at 6.5%, there can be a case made where core inflation actually undershoots the long-term average for a brief period of time. So it is quite possible that core inflation going forward could be in the range of 4.5% to 5%.
Right. And while you're here with us, Vivek, if you could quickly just run us through your expectations on the IIP numbers as well.
Sure. So IIP, the leading indicators for the month, they tell you that things have probably improved just on the margin. And this is what the consensus figures are suggesting. From a number of 3.7%, market expects the number to be closer to 5%. Although our own estimates are not that high, we expect it to be just around 3.9, 3.8, 3.9%, just a notch above where it was in the previous month. Now, in case of IIP, if you see a little bit of lack of clarity is there. So on the external front, both exports and imports have been slowing down almost month over month. Every month we are seeing that slowing down happening. And that IIP also captures a certain degree of the export producing sectors, exporting sectors. So that is going to manifest in case of IIP as well. Some of the infrastructure sectors are still supportive. So whether they are supportive on account of government spending from the central side or from the state government side, that's immaterial. But the broader message is that public capex spending is lending a helping hand to infrastructure sector, and that is getting reflected in your IIP as a whole. So capital goods sector within IIP and infrastructure and production goods are also finding some support.
All right, we will leave it at that. Mr. Vivek Kumar, economist from QuantEco. Thank you so much for taking time out to be with us this afternoon here on Business Plus and helping us preview those upcoming inflation and industrial production numbers. We let you go at that. Hope to have you again to analyze more macro data here on Business Plus. But for now, thank you so much, Vivek, for being with us. And before we wrap things up, Karthik, very important piece of news. Byju's, the much in trouble Byju's, has come out with a very surprising announcement. The EdTech player now says it wants to repay that $1.2 billion debt, and in fact it's willing to sell some of its companies to repay that debt.
Absolutely, Krishna. I think a sigh of relief, if I may, for the investors of Byju's, which have on their books underwritten the value of their investment in Byju's. And the valuation of Byju's, as we've seen over the last 1 year, has fallen to a third, from $22 billion valuation levels to under $8 billion, and by some estimates as low as even $5 billion or so. But yeah, I think the headline emerging really is that Byju had this loan, this debt hanging across its neck like an albatross, and it has finally decided to get rid of that loan. And desperate times call for desperate measures, and I think the desperate measures here are selling off two of its assets. It has a learning, an advanced learning platform, and it also has a kids platform, and both combined together are likely to fetch Byju's up to anything between 800 million to about $1 billion worth. So these are two kids on the block right now, literally, to be auctioned, to be sold to whoever finds value in purchasing them. And yeah, Byju's really trying to deleverage itself. We are seeing this sort of change in financial strategy, deleveraging itself at a time when it has done a rejig of the board. We've got luminaries like Mr. Mohandas Pai, as well as former SBI chairman Rajneesh Kumar on the board of Byju's, and I think some good sort of financial management sense prevailing there, that growth at all cost, no matter how large the loan book is not going to be sustainable, and it's a good idea to perhaps get rid of some of those assets right now and make sure that the books clean up. Also at a time when we are expecting the audit of the thus far unaudited Byju's books to come out by the end of this month. So September is when the books of FY22 were supposed to be audited and released, and by end of December is when we are looking at the audited numbers of FY23 coming out. So I think any sort of cleanup right now will not reflect in those previous year's audited numbers, but going forward, it definitely is a sign of things hopefully looking better at Byju's.
Signs of things hopefully getting better for Byju's. Yes, clearing off that $1.2 billion debt will certainly get it back in the game and get back some of that lost credibility, Karthik, that is because of all the headlines that's been coming out of Byju's. If
nothing else, Krishna, I feel at least there is going to be a renewed investor interest now. So at a time when it has lost value, at a time when it has lost face, more importantly, and shed tears, quite literally, it's time to tell the world that, hey, we have made our mistakes, we are trying to overcome them, and it does become a second life, so to speak, for Byju Ravindran and the entire management of Byju's to come out clean and say, yes, I mean, you have made our mistakes, we have admitted them, we have cleaned up our books, and look at us afresh.
And we are learning. We are, after all, a learning company, and we are learning from our mistakes. The message coming out from Byju's, and with that, I'm afraid I've completely run out of time here on the show. Karthik, thank you so much for joining us this afternoon. And Suyash, thank you for standing by and getting us all the analysis of the day's trading session, and of course, all that number crunching on Nifty hitting the 20K peak. Thank you so much. With that, to wrap here from my side, this is Krishna Kumar signing off. Keep it with News 9.